its capital market here on Channels Television. On a monthly basis, analysts from different sectors carry out research works on the state of the economy and profile recommendations in terms of how it affects business and, of course, what the policymakers can actually do to help impact the economy positively. Of course, one of such analysis was shared in the capital market world by the head of research at FSDH, Merchant Banker Ayodele Akinwumi, who is a regular on this program. He shared that with the media, especially the financial journalists, and gave some recommendations, especially when he talked about the flotation of some zero-coupon bonds for the federal government to be able to use, leverage, and manage its cost of debt servicing. Let's listen.
In order to manage high interest expenses on the debt of the federal government relative to its revenue, it should consider issuance of zero-coupon bonds. Such bonds and other bond issue going forward should be tied to specific projects that have economic value addition to the country, and there should be a mechanism to assess the debt contracted and to determine that they are used for the intended projects. Government to consider crude oil swap arrangement with construction companies, either local or foreign, for road and rail construction across the country. This will help accelerate the development of road and rail transportation in the country and also reduce the direct government expenses on such projects. Eventually, project will improve the competitiveness of the Nigerian economy. There is the need for urgent passage of all the bills in the oil and gas sector, and such bills should be signed into law without any delay. This will bring about more clarity in the oil and gas sector and enable investors to take long-term investment in the sector. This will also help to attract foreign direct investment into Nigeria and will also create jobs in addition to increasing the revenue for the government. Available data from the Central Bank of Nigeria shows that foreign direct investments accounted for only 11% of the total capital importation into the country between 2010 and 2018. Foreign portfolio investment accounted for 70% of the total capital importation during the same period, while other investments accounted for 19%. The high foreign portfolio investment reduces the effectiveness of any exchange rate management regime. This is because of the distortions that are usually associated with the foreign portfolio investment, particularly in a small developing country like Nigeria. Government should engage Nigerians in diaspora and sell investment opportunity to them, both debt and equity in government securities and the entities, in order to drive foreign remittances inflow into Nigeria. The external reserves continued its upward trend in the month of May 2019, rising to its $45.12 billion as at the end of May. According to the Central Bank of Nigeria, the external reserves position is enough to cover over 13 months of import, thus providing short-term stability for the value of the currency. There was a further drop in capital importation via the investors and exporters foreign exchange window, INE window, in the month of May, following the steep decrease recorded in the month of April 2019. The capital importation through the INE window in May stood at $2.1 billion, the lowest figure recorded since October 2018. The monetary policy stance of the Central Bank of Nigeria favors a low interest rate regime in the short term, except there is any domestic and external shock that can make the Central Bank to change their policy. So they are more of pro-growth, just to ensure that they complement the fiscal strategies to grow the economy, create jobs, and then to ensure development. Investors should continue to invest in fixed income securities with good credit rating. Companies should consider interest rate swap to manage the risks of their loan liabilities. In May 2019, the Nigerian Stock Exchange All Share Index recorded its largest month-on-month appreciation since January 2018, rising by 6.55%, and of course that was mainly accelerated by the listing of the MTN shares on the Nigerian Stock Exchange, which was a good development. The equities market recorded more appreciation than depreciations in the last 6 years between the month of May and June, and therefore we'll expect that the equity market may recover further in the month of June 2019 as investors continue to position ahead of earnings season, that's half-year earnings season. And a number of these companies also that are listed usually give interim dividends, so investors may want to position for those companies. Investors should continue to buy value stocks that have history of good dividend payments. They should also maintain a long-term view of the market. Our stock recommendations are Dangote Cement, Dangote Sugar, Flour Mills, GT Bank, Nigerian Breweries, Zenith Bank, Seplat, and Double One PLC.
Those are some thoughts that are coming there from the analyst at FSDH Merchant Bank. And of course, it is something that you may want to just try out, as you take out your investment decision next week. But basically next week, there are quite a number of events to basically watch out for. Of course, we know that the CBN will next week be releasing its agenda, the 5-year agenda, which of course may be described as its roadmap, monetary policy roadmap for the country next week. On the stock exchange next week, we know that Ila Lakes PLC will also be closing the markets sometimes next week. That will be on Tuesday 11th, day on the Nigerian Stock Exchange. All of those activities, you should basically watch out for all that here in your news leader, Channels Television. On that note, we'll draw the curtain on the program this evening. Thank you for being a part of it. Temple Ashaju. I'll see you next time.